$400,000 and none of it lowers your tax bill by a single cent. That is the sentence the brochure will never print, and it is the first thing you deserve to hear about Turkish citizenship. Because somewhere on a glossy slide, right now, someone is showing you a second passport and letting you believe it quietly solves your taxes, your banking, and your future in one clean stroke. It does not. And the gap between what that slide promises and what the law actually requires is exactly where good, careful people lose money and lose years. Let me show you the scene I want you to avoid. Picture it. You have moved the money, you hold a new passport, you feel lighter. Then months later, an email lands from a bank in a third country where you tried to open an account. It is polite, it is short, and it says your application cannot proceed at this time, no reason given. A week after that, a letter arrives from a tax authority in the country where you actually live, asking you to explain your worldwide income for the year, because as far as they are concerned, nothing about your life has changed. The passport did not answer either of those messages. It could not. It was never designed to. In this video, I am going to walk you through the real requirements behind the Turkish citizenship pitch, not the marketing version, the actual legal spine of it, the qualifying investment, and what the money is really doing. The paperwork that turns an application into a decision, the bank steps, the tax number, the notary, the appraisal, the permit, and most importantly, the honest caveats, the traps that most advisors skip, because caveats do not close deals. Stay with me all the way to the end, because the single most valuable minute of this video is near the finish, when I tell you what a passport can and cannot do for the one thing you actually care about, which is tax. If you leave early, you will keep the exact misunderstanding that costs the most. If this is your first time here, in Berktüzel. For the past 8 years, I've helped entrepreneurs and investors plan their international structures. I'm also the founder of Corpenza. So let us start with a fair question. Why is Turkish citizenship one of the most talked about programs on earth right now? The honest answer is that it sits at a rare intersection. It is one of the faster routes from investment to a passport compared with many programs that ask you to wait years and physically reside first. It is anchored in a real country with a real economy, a genuine domestic market, and a strategic position between continents, a true bridge with weight behind it. That combination is why the demand is so high. And that same combination is why the sales pitch is so aggressive, because when something is genuinely attractive, it also becomes genuinely oversold. My job today is to keep the attraction and remove the overselling. Here is the structure of the real requirements in plain language. The program is built around a qualifying investment, and the most common route people choose is real estate. The headline figure that gets quoted most often is a property purchase at or above a set threshold in dollars. I am going to say this carefully because it matters. That threshold is a policy number, and policy numbers move. It has been revised before, and it can be revised again. So treat any figure you hear, from me or from anyone, as directional, and reconfirm the current official threshold before you make a single financial decision. If a salesperson quotes you a number with total confidence and no asterisk, that is not confidence. That is a red flag. Now, what does that money actually have to do to count? This is where the paperwork begins, and this is the part the pitch compresses into a single happy sentence. First, the property has to be genuinely purchased and registered in your name at the land registry. Ownership on paper, formally recorded, not a promise, not a reservation. Second, and people miss this constantly, there is a holding commitment. You are expected to keep that asset for a defined period, commonly quoted as 3 years, during which you are not free to simply flip it. So your capital is not liquid. It is parked, and it is parked in a specific asset in a specific market. That can absolutely be a fine investment, but it is an investment with the ordinary risks of any property, including price movement and currency movement, and you should evaluate it as one, not as a fee you pay for a passport. Then comes the valuation. The purchase has to be supported by an official appraisal report from an authorized valuation firm, confirming the property is genuinely worth the qualifying amount. This exists precisely to keep every deal honest, and it means the price on your contract and the independent valuation both have to hold up. If someone offers you a property where the sticker price conveniently clears the threshold, but the honest market value does not, you are not being helped. you are being set up for a rejection or worse. Let me walk you through the ground level steps, because when you see them laid out, the myth of the effortless passport dissolves on its own. You will need a Turkish tax number. It is a simple administrative step, but it is a real one, and almost every meaningful action downstream depends on it. You will open a local bank account because the qualifying funds are expected to flow through the banking system in a traceable, compliant way, and modern banks apply serious source of funds checks. You will work through a notary and certified translations for your documents because official filings have to be in order and properly attested. You will complete the title transfer at the land registry, and then, on the basis of that completed, documented, appraised, and committed investment, the citizenship application itself is assembled and submitted, typically alongside a residence permit step in the sequence. Notice what just happened. The passport is the last domino, not the first. Everything before it is the structure. The account, the tax number, the compliance trail, the registered asset, the valuation, the holding period. The pitch sells you the last domino and stays quiet about the row of dominoes that has to stand up first. And this is the whole thesis of this channel, so let me say it as directly as I can. It is not your passport, it is your structure. The document is the visible tip. The value and the risk live underneath it. Now the timeline, and again with an honest asterisk. People love to quote a fixed number of months from investment to passport in hand. I will not give you a hard promise, and you should distrust anyone who does, because processing times drift with government capacity, application volume, and the completeness of your file. The single biggest variable is not the government, it is you, and whether your documents are clean, translated, consistent, and complete on the first pass. A tidy file moves, a file with a missing appraisal, a mismatched name transliteration, or an unexplained source of funds sits and waits. So the timeline is real, but it is a range, not a guarantee. Confirm the current expected processing window at the moment you apply, not from a video and certainly not from a brochure printed last year. And here is the caveat that most advisors skip, the one I promised you. This is the whole reason to stay to the end. A passport does not by itself change where you are taxed. Read that twice. Your tax exposure is driven overwhelmingly by tax residency, and tax residency is driven by where you actually live, where your center of life sits, how many days you spend where, and where your real economic activity happens. It is not driven by which card is in your pocket. So if you are living in your country of residence, running your life and your business there, and you acquire a second passport without changing any of those facts, your tax picture can stay exactly where it was. The email from the tax authority in that opening scene, it arrives precisely because nothing about your actual residence moved. The passport was never the lever. Residence is the lever. That is the most expensive misunderstanding I watch international investors make, and I want to be very precise about who is at fault, because the answer is usually no one lied to you outright. The pitch simply lets two separate ideas blur together. Idea 1, I have the right to live and travel more freely. Idea 2, I now pay tax differently. The first can be true the moment you hold the passport. The second is a completely different project that involves genuinely relocating your residence, genuinely moving your center of life, and building the tax, banking, and corporate pieces to match. A passport is a door. Walking through it, actually changing where you live and operate, is what changes the tax. Buying the door and standing in the same room changes nothing on your tax return. So here's what I recommend, and it is the same thing I would tell a close friend. Stop treating the passport as the product. Treat it as one option inside a larger structure and decide whether you actually need that option before you fund it. If your real goal is mobility and a strong foothold in a major economy, Turkish citizenship can be a genuinely powerful piece, and the country itself is an excellent place to anchor to with real depth behind it. If your real goal is a lower tax bill, understand clearly that the passport is not that lever, and that chasing it for tax reasons is how people spend a fortune solving a problem they did not have while ignoring the one they did. Build the map first. Where will you truly reside? Where will your income actually arise? Where will your company sit and where will it bank? And only then ask which passport, if any, serves that structure. When you sequence it that way, a second citizenship stops being a gamble and becomes a clean, deliberate choice. Passport, tax position, company, and banking are one connected package. A passport standing alone, disconnected from where you live and operate, is the one thing that reliably disappoints. If you want that map built properly, with the qualifying investment, the residence question, the corporate layer, and the banking all lined up so the pieces actually reinforce each other instead of contradicting one another, that is exactly the work we do at Corpenza. We start from your structure, not from a slide. That's it for this one. I hope to see you in other videos. Take care.